Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
Euro-dollar. An immediate countering bullish open and close white Mariposa yesterday, after the previous session's bearish engulfing pattern. A new pattern has emerged from a previous pattern, that the previous one looks like it failed. Originally I noted what I thought would be a lopsided double top pattern from mid-January to date. Now the key level here would be below 117.64. Now we have pierced that level but not closed below it, though we came awfully close 2 days ago. However, as I said yesterday, I quote, "The longer this lack of bearish incentive occurs, the greater the chances a pattern will not be fulfilled on the downside." End of quote. At the same time, I pointed out a new late January to date downtrend, currently at 117.99. I said on this downtrend yesterday, and I quote, "This could set up a possible late January to date descending triangle pattern, though it is early yet, but it's worth keeping an eye on." End of quote. Well, I have kept an eye on it, and with the move up yesterday, I've clarified it into a late January to date descending wedge pattern, currently 117.23 to 117.99, instead of a double top or even a descending triangle pattern. So, unless we have a false break, which still could be a possibility, then I think this will become the next driver in this market. Thus, in the immediate vicinity, overhead we have the June 25 high at 118.29 with the June 2018 high at 118.51, a little beyond that. The base of the most recent action continues to be, once again, somewhat unsurprisingly, the slowly rising green short-medium moving average, currently 117.73. Looking below, we have the October 21 high at 116.92 and a mauve medium moving average at 116.95. In a bigger picture, the market remains within the mid-25 based bright red shallow bull channel, currently 116.16 to 120.94. This pattern continues to be the main showrunner for this market. So far today, a small follow-on higher up to the June 25 high as prices cautiously push up over the dark blue downtrend and potentially start at least a breach, if not a break higher. Cable, aka sterling against the US dollar. A bullish opening long white Mariposa and bullish engulfing pattern yesterday after the previous session's second consecutive indecisive spinning top pattern, but one that was also an outside day. Now, a new pattern has emerged from a previous pattern, much like Euro-dollar, that looks like it has failed the previous pattern. Originally I noted what I thought would be a lopsided double top pattern from mid-January to date. The key level here is the low 3 weeks ago at 135.06. We have pierced and closed below that level late last week and early this week, but there have been some big obstacles in the way lower. Chief amongst this is the flatlining gold long moving average, which is currently at 134.45, then the 2024 high at 134.36, followed by the slowly rising medium moving average, currently 133.96. As I said yesterday, and I quote, "The first two seem to be doing a pretty good job of holding prices up right now." End of quote. Thus, I also noticed a new pattern emerging from this failing double top, a mid-January to date descending wedge pattern, currently 133.84 to 135.41. It's highlighted in not very well highlighted, I have to say. It's not very well highlighted in bright red on my daily chart. This pattern seems to have taken over the running of the latest moves. Now, we are still within that viscous congestion band between 135.16 to 135.55, containing the 2019 high at 135.16, as well as the rising green short medium moving average, which is currently at 135.28. Meanwhile below, well, support came in, unsurprisingly, at the September 2020 high at 134.83. In the bigger picture, prices maintain their stance within the previously broken and now seemingly repaired, very shallow dark blue bear channel, dating between early July to early August last year through to late January this year. And that's currently 117.96 to 136.03. 129.76 to 136.03. Finally, I'd previously set out targets below for the double top pattern of a primary target X down in the 134.17 zone, for secondary hard to reach target X1 down in the 133 even zone. Unless this latest move higher turns out to be a false break, which is still possible, then I will retire these targets by next time. Now, so far today, a move up, breaching the not so bright upper trend line of the descending bright red trend line of the descending wedge pattern, and potentially starting a move higher. However, the market has since pulled back lower after this initial breach higher. Now, we did manage to exit the viscous congestion 135.16 to 135.55, however briefly, but were capped by the congestion at 135.81. US dollar against the Japanese yen. A second bullish white soldier yesterday after the earlier hanging man pattern. Prices pushed up over as well as closed over the flatlining green short medium moving average, currently at 155.96, and significantly over the dark blue upper tine, which is currently at 155.94. And that's of the dark blue late January to mid-February bearish shift pitchfork. The base of the action was on, well, not quite on, but still based on the slowly rising mauve medium moving average, currently at 155.20. This is potentially an important move higher, and I'll discuss this shortly. But first, I also wanted to highlight the larger picture, where we remain within the previously breached but seemingly repaired bright red April to November 2025 bull channel. It's currently 151.58 to 158.42. Now, I have said over the last couple of days how, and I quote, I once again suspect I may need to finesse this bull channel to a slightly more acute bullish angle. Maybe look to retire the dark blue bearish shift pitchfork soon. End of quote. Well, then on the second point, the bearish shift pitchfork, I am actively considering that. And on the first point, the bull channel, I've today drawn a slightly steeper September and November 2025 to date based bright green bull channel. It's currently 152.88 to 160.64. Finally, recently, I've been continuing here the theme of a very lopsided double top in sterling against the US dollar, and even more lopsided double top in euro against the US dollar, and how we might have here a very nascent double bottom. Now, whilst this idea may soon be retired in both sterling against the US dollar and euro against the US dollar, it may still hold water here. Thus, the key level to watch for would be any significant move up over 157.72, and that's something to keep bearing in mind. So far today, well, a reactionary move lower after the last 2 days' bullish actions, but halting just under the June 1990 high at 155.78, as well as being held up by the green short medium moving average and the breached dark blue upper tine of the bearish shift pitchfork. US dollar against the CNH. A fourth bearish black crow yesterday, with the move verging on being a free fall. Prices made yet another new low and low close, not seen since April 2023. The market punched down and closed below within the original December 2025 to early February bear channel, which is currently 682.49 to 687.06, as well as closing below the significant 50% Fibonacci line of the February 22 to April 25 move at 686.60, plus just under another congestion at 685.58. Further below, we have the April and March 23 lows at 682.95 and 680.71, before we have a dead zone until the 50% Fibonacci line of the May 20 to March 22 move at 675.06. So far today, another significant move lower, below and capped by the congestion at 685.58 58, and testing both the April 23 low and the previously broken and seemingly repaired lower bear channel line. It is yet another new low, one not seen since April 2023. US dollar against the Brazilian real. A fifth bearish black crow yesterday, and the lowest low and low close since May 2024. Prices dropped down for a third time, and this time pierced and closed under the significant 50% Fibonacci line of the October 2019 to December 2024 move at 513.82, and went further, closing below the bright red October 2018 today uptrend, currently at 512.88. We have now entered a zone below that seemingly has little major supports, with congestion at 508.16 and 501.48, plus the May 24 low at 504.32. Overall, we still remain within the important dark blue mid-December 24 to mid-April 25 bearish shift pitch hawk, in between the overhead dark blue middle time, currently at 520.85, and a dark blue lower time below, currently at 494.94. It's actually below 5 even, that lower time. This bearish shift pitch hawk is still the very excellent showrunner here for this market. US dollar against the Mexican peso. An indecisive doji cross yesterday after the previous session's counter to the counter bearish dark Lao cover pattern. Below, we have the previously breached dark blue lower bear channel line, which is currently at 1706.17 of the November 25 to date based bear channel, which is, say, 1706.17 to 1751.24. This is not a too well defined bear channel, but it's still there and has been the showrunner here since late last year. However, in the attempts lower in January and February, prices found it tough testing the March and April 2016 lows at 1709.23 and 1703.89 respectively. So please bear that in mind, especially after this past Monday's reactionary move back up, after testing that zone below. We still have nearby a late January to early February possible cat's ears pattern, though so far the pattern has not been triggered on the downside, and I am considering retiring it as a pattern idea. As I've said over the last few days, and I quote, "The longer the market hesitates, the less likely it may happen," end of quote. I have suspected this hesitancy is due to the influence of the nearby bright red neckline extension below, to the January to May 2021 head and shoulders top, which is currently at 168017, as well as, I suppose, the bright green middle time, currently 169815. And that's of the bright green April to November 2025 bearish shift pitch hawk, which has been useful in showing the bearish angle of attack for this market. Further down we have the 2023 low at 1661.94, and this is all that stands in the way before the significant congestion zone between 1625.52 to 1646.25. Overhead we have the July 2017 low at 1743.74 and a whole mess of congestion between 1756.93 to 1766.16. Now, so far today, a lower open, but an immediate reactionary move back up, giving us a potential, if tiny, bullish engulfing pattern right now. As I say, even though the range is quite narrow.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.